Hello traders, it's Victor from TRADEPRO Academy, and in today's video what we're going to be breaking down is the concept of exhaustion predominantly. We'll be talking about both absorption and exhaustion in the futures markets and how they relate to order flow, so you can find moves that are going to reverse or areas that are failing to continue the trend. So absorption and exhaustion both generally allow us to find areas that actually turn markets around based on how the order flow reacts. So remember, one of the best things to understand about order flow, specifically if you're trading the tape, the DOM, is the pace of the actual movement. Now, the quantities that go through and the aggression that goes through is very important as well, but the pace will dictate a lot of our understanding. So today I'm going to be comparing both the S&P and the NASDAQ. We'll do some trade review and break down some of my thought process around those, but mainly 2 days that have allowed us to identify both exhaustion and absorption have been present for us to relate to. So why don't we dive right into this and let's take a look at what this looks like on a futures market, right, in the S&P 500 and the NASDAQ in itself. So Monday and Tuesday, the start of the week, May 20th and May 21st, we had two unique moves where we had an aggressive move to the upside on May 20th, where prices on Monday rallied pretty much off the open and came into a region where it looked very interesting. Why did it look very interesting? Because at a certain point into these highs, what we saw was the accumulation of a lot of buying. Now, when we talk about absorption specifically, absorption is the notion that there are very aggressive market orders that are going through, right? They're coming in and going market buy, for example, into a high. They're allowing to lift the offers, right? They're lifting the offers and they're going in at the ask price, for example, into a high. And what gets created from that notion is a very, very extended delta in that regard. So what happened on yesterday's session is we rallied pretty aggressively. You can see here as we run up, we're getting the notion that there is a lot of orders that are going in at the ask, right? They're continuously going at the ask, at the ask, at the ask. Now, if this was more in terms of absorption, you get this large clustering of delta that accumulates into that high that actually allows prices to continuously reject, right? Which tells us that big sellers are coming into the market fighting the big buyers. Now, in this case, you can see even just from this image here, there's one extension of very heavy positive delta. That doesn't necessarily dictate that there is going to be absorption to that high, right? This is more so the fact of exhaustion. So as exhaustion comes into price, what happens is something very similar. As prices run up, we get this continuous momentum in a directional perspective to the upside where people are coming in at the ask, right? There's very strong aggression on the buy, on the buy, on the buy. And all of a sudden, right, that buy starts to disappear, where you start to see decent orders coming in on the buy side, and it's the pace of the tape that allows us to see that, okay, there's actually exhaustion getting formed into these areas. So it's not the mass accumulation of people getting trapped into a high, but it's the lack of continuous buying after we saw that burst of pressure, which allows for the opposition to come in, which is the sell side. So into the upside, we generally notice that buyers get exhausted, right? So they stop hitting at the ask super aggressively. There's some rotation back down. They kind of reoffer, and the reaction is extremely important. So at some point, right, leading this whole way up, there was buy, continuously large market orders. And all of a sudden, there's a big cluster of market orders that comes in, and no one wants to buy above that, right? They buy very, very slowly and depressingly above that, if you will. And at a certain point, that tells us that, okay, these buyers have started to dissipate, right? We're not seeing the same buy momentum that we once saw that rallied this whole thing up, that allows us to see, right, that continuous market buying. So even if we look at a footprint here, it gives us an indication of how these things kind of transpire. When we see, this was Monday's movement, right? We can see, okay, I missed this larger move to the upside because I wanted to see prices close to that 24. And I saw them coming into the buy side very aggressively, but no real continuation to the long, which was allowing them to get stuck. So I say, you know what? This is a decent opportunity for me to look for that short. We get into the buy. You can see very big market buyers, right? On this delta on the footprint, you see 1100 trade at the ask. And then they move up, right? They continuously buy. Some sellers are trying, but they're getting pushed aside. At a certain point, we have some very thick buyers. So we want to understand that, okay, there's some very thick buyers in a reaction to the downside, right? They try to buy some more into these highs, and they just can't, right? They can't do it anymore, and you're seeing big market buying, but they're starting to get a little stuffed. So my thought process was, you know what? Okay, they're getting a little stuck into this high. They don't want to continuously buy higher. They're kind of getting exhausted on the move, right? The aggression on the sell isn't necessarily quite there, but the lack of buying momentum is starting to really vanish. And you can see this on the footprint, right? I can see that over here you have some big buyers, they push lower. So I say, you know what? I'm going to shorten to these 45s, 44s. And I think it might have been a bit early, right? I was playing off of these guys getting reacted against, and all of a sudden we get this push up, it spikes up, it took me out, right? It takes me out on the first move into that 47, and the same thing happens, right? They try to buy higher, but they can't. They try to buy higher, but they can't, and this was the nail in the coffin right here. About 1,558, right, and below them another like 900 or so come in at the ask, right? They trade at the ask into the market. And this creates a very thick positive blue delta that outlines that 45, and immediately that's a big buyer, and they can't continuously buy above it. They start pushing lower. So I said, you know what, the first short, a little too early, but if I can get a better price into 46, 47, I think these guys are getting exhausted. And I picked those guys up right between 47 and 46 area for that short again, in the anticipation that these guys are no longer continuing that upside momentum, right? And all we need to see is an aggressive short come in, and they've really picked these guys out that they're actually getting exhausted into these highs. So what you see on the pace of the DOM is like, you see that big market buyer that comes in, they trade at the ask, they immediately reoffer them, right? And they try to trickle back up. No one wants to buy aggressively back up. And when they do, they just push it back down. This allows us to see a very indicative sign of the exhaustive buyers into highs. We can mark this area up, right? We can mark two areas where the big buyers had transpired. You can see over here at 45, you've accumulated about 3,000 positive delta, right? Above, you have a couple of hundred, maybe close to 1,000. Once we actually re-offer back below that 45 and through those guys, right, that confirms the exhaustion. We can look to play even on the short into those areas with stops above to actually see that move to the downside. And you can see, right, they come up, they try to buy again. It's not strong enough, right? It's not strong enough because they react to the sell, and we get this larger downshift move that eventually trades down into our area around that 25. So we got that nice, clean, exhaustive move that got these guys, one, trapped, two, they just couldn't push anymore, and that allows us to find that reaction to the downside swing. Now, when we look at it from the other side, right, we can look at absorption, I should say. Absorption is the phenomenon where you get a lot of market participants trading at either the bid or the ask. In this case, there was a lot of selling coming in, trading at the bid, right? So when you see this much aggressive market selling coming through and they're creating a very thick block of delta, you can see it here on the DOM itself, right? There's a cluster between 22 and 26 that have created this massive structure of all of this negative delta, meaning that they just kept trading into the sell, into the sell, into the sell, and there was no continuity in that. There was no aggression behind it, and the buyers swept it up right away, right? Every time the buyers cleaned it back up, cleaned it back up. So every time we get these like big negative deltas into lows and buyers spike it back up, right? They try to sell into it, buyers spike it back up. They try to sell into it, they spike it back up, and we're trading above these guys. That's telling us that there's a clustering of all this negative delta that transpires into these lows, as it did on the overnight, right? Accumulating all of that, right? Trapped absorption to the low, which allows us to find that next leg to the upswing. So just as we found them getting exhausted into highs on the buy side, today, right, just one day after, we come back into the area that we care most about, and we find them getting trapped into the lows. So they get trapped into the lows, picks them up pre-market, right, trying to look for that continuation to the upside swing. Took them all out. They're trying to run a little higher. There's continuous buying. You look at this footprint, what happens? They come in on the sell, single prints on the sell, large seller into lows, immediate gets reacted against, right? One big candle with negative delta, right, that trades up is telling us, okay, these sellers are in trouble. They pull it back down. Again, same thing. Massive sellers come into lows, right? They're trading at the bid. They keep attacking, and then boom, the buy reacts. The key with both of these, exhaustion or absorption, you want to see the reaction against that side. So if they're continuously hitting the bid, and they can't go lower, right? The pace starts swinging back up with larger buyers actually taking them on and pushing back up. What you're seeing in that case is a turning point where these guys are no longer allowing for the real accumulated sell that brought it all the way down to continue, but instead they're finding themselves trapped into an area where the buyers are taking advantage of them, which also happens to be a distribution low aspect. So on the overnight, not only do they trade a lot of volume down here, but if we look at the distribution, it's a very clean ledge as to where we've held out, right, these rotation distribution lows, which allows us to find a very strong support for that current auction to take place. So I would want to swing to the upside from here. And you see all this selling transpire. They just keep pushing it back up. Large blue candle here, positive candle with some buying at the highs. Net negative 1200 delta on this candle allows for prices to continue back up. And every time they sell, the buy side is stronger. So one thing that we notice on the tape is that there's continuous selling. And again, pace is a very important aspect. So if they sell 2, 3, 6, 7, 800, and here you can see 570 tried to come in at the bid and they push it back up. When you see these very large orders coming in, right, on the sell side of things, and they can't react aggressively lower, but instead they just like float a little higher, some more buy side comes in and continues to buy higher and higher, that's what's telling you that not only is this DOM leading to the bull side, but these guys are actually getting trapped on those shorts into those areas, right? So it tells us who's in control on the DOM, and it also tells us where these guys are imbalanced to see some kind of reversal in price. If we take a look at something else as well, we can take a look at a different asset, right? How does NASDAQ compare to the S&P? Because we're trading a slower market, right? We're trading a very slow market here. So the S&P, if VIX is like below 13, 14, you're probably better off trying to trade NASDAQ because it has better moves. It has the better opportunity swings, right? It allows for prices to get decent moves, and we can look at it in the same manner realistically. We can look at the idea of both absorption and exhaustion on NASDAQ and how they compare to what's going on with the S&P. So realistically, we can take a look at the delta and the NASDAQ profile to get us a better understanding of what is going on, only if we can find it. So this is the weekly on NASDAQ, and this is the daily. So when we look at NASDAQ from yesterday's perspective, right, NASDAQ traded a bit better in terms of the upside. So when we talk about the concepts of absorption and exhaustion, right, remember that absorption, for me, the way I see it, is the creation of very heavy delta that is getting accumulated at one spot that refuses to allow price to continue. So for example, if you accumulate a lot of positive delta into the highs, right, they're trading at the market buy, they're trading at the ask, and they continuously fail, well, okay, they're getting absorbed. The big burst of buying in a directional move that slows down, right, and might not create as heavy delta continuously and gets reoffered, that's more of exhaustion, right? When we start to see the slowdown of buyers coming on the tape. So if I take a look at NASDAQ from yesterday, NASDAQ, if we look at it from a distribution perspective first, what we can see is that we've got a few key areas, right? We've got these distributions marked up. You got about around 705-ish, 710 is the top of an area. You also have the bottom of the area at 670, right? And then below that, 625-ish. So yesterday we just spike up. We move above that 670, and that allows for the buy side to really open up. You move above that 705, 710, that allows for more buy side. You move above 730, that allows even for more buy side. So when I'm looking at this, what we're doing is we're leapfrogging through these distributions higher and higher, which allows for pressure to the upside momentum. So if I take a look at this and how this transpires even on a delta chart so I can identify more of an imbalanced area, what we're seeing, okay, you get this very big spike. I try to short here into that 705, 710. I got stopped. We start moving up, right? We start moving up above this 730. And what's interesting about this 730 is that, or I should say first, we start moving up into that 760, 755. What's interesting is we started to see the accumulation of a lot of buying at one point, right? A lot of buying without price allowing for the movement higher. So I say, you know what? Okay, these guys are getting a little absorbed into these highs. While the S&P, right, was topping out. So I'm looking at this thinking, okay, well, if the S&P is topping out, right, there could be a topping out in NASDAQ, but you got to remember that they're comprised of different things and the volatility is different and there's going to be different moves realistic. But I'm looking at this and thinking, okay, you're getting a cluster of delta, right? They keep trading at the ask, at the ask, at the ask, and like nothing's really happening, and they keep reoffering. So I looked at this as a potential little short. But what happened down to the 730, or you can see this clustering of negative delta, right? Clustering of negative delta that transpires into the 730. What you can see is very, well, here a massive seller comes into these areas, but down here, the delta was very strong on the negative side over here, right? You can see it, and what happens is vast accumulation. They keep rebidding, nice pace on the buy side. So I'm like, okay, crap, I got to get out of this because there's high probability that these guys don't want to sustain this. This is the exhaustion on NASDAQ. We come up into the high, right? Some big buyers try to step in and they react against them, right? No getting necessarily trapped aggressively, no massive absorption, just failure to continue buying. We come down to that 710, a very strong barrier based on these distributions to hold. So you know what? Okay, this is a shot to see if we can go into that long with that. If we're below that 760, it gets kind of iffy. Okay, great, whatever. So when we get these movements on the overnight, right, coming into today's session, what we're seeing is that, okay, we're holding 760, right, as the resistance where the absorption had happened before. That's happening right now as we speak as well. When we're looking at this, there's absorption that's happening into these highs, right? It's just continued buying with reactive sell. It's a process that gets laid out over time. I wouldn't say it's necessarily exhaustion because they keep trying to buy into it. And then when we look at this, right, we have a very important level that sticks out at the 710 region, 705, from the overnight, from yesterday's start, right, from today. So my thought process was, okay, well, we dumped down. We didn't necessarily trade 675. If we can hold above that 700, 710 area, there's a reasoning for those longs. So pre-market, right, I added some here, right, tried to pick some more up on these pullbacks for that continuation higher, especially if you're seeing once we move back above this, you can see all this negative delta, right? Now that we're above that negative delta, what's happening is they're getting absorbed into that area. They're getting trapped, and they're getting absorbed into those regions alongside with the S&P trying to catch a bid. So we're coming into an area of danger right now because they keep trading into it, and what's happening is that they're not allowing for the buy side to continue buying higher, right? They're getting a large blockade of delta, and they're getting trapped, right, which is turning into more of an absorption. So if we can't make a move above this 760 and we start moving back below this negative delta area at 730, well, we start to see a transition. So if I'm looking at this, what I'm going to be looking at for massive turning points in the market, right, I like exhaustion and absorption. They happen in different parameters, but all in all, they conclude to the same thing, a turning point or reversal in price. When you look at exhaustion in the market, you look at prices moving into one direction. So for example, they're moving to the upside. And there's very heavy buying that transpires to the upside, right? When that heavy buying starts to kind of fade away and you start dropping off, where there's one maybe big buyer, they swing it back up aggressively and then they just re-offer back below it. When you see that reaction against the big buyers that like re-offer, so if you get like one big positive delta, they trade at the ask and then they just sweep it back below, you're starting to see the failure of buying, right? They're both a process. So when you move up aggressively on the buy side and you start to notice, okay, the pace of the buying is starting to drop off, the size of the buying is starting to drop off, you still need to wait for that reactive seller to flip this thing back down, right? Yesterday with the SPOOs, I was a little early on it, right? Because I didn't wait for that like one final burst of buying to fail pretty much. When you talk about absorption, it's a very similar concept in terms that you're starting to look for a reversal in prices where there's a mass accumulation of people trading at the ask or at the bid to the downside, and they keep going into and creating this very large negative delta as we saw today here on the screen. And what happens is that they can't push lower. So when you get like thousands and thousands of net sellers at a low, right, and they just react on the buy, and every time a big seller comes in, they just allow it to sweep higher, you're seeing the concept of absorption, which is going to be a high chance of a turning point, like flipping prices around. You're seeing a very similar concept right now. if I take a look at this DOM both on NASDAQ and the S&P DOM, the NASDAQ delta. NASDAQ's accumulating a lot of heavy positive delta into this 760, a very important area, not only from the overnight, but from the prior day. And they're reacting against it. They buy, react, buy, react, buy, react. It's a process that happens multiple times over, creating wicks. It's the same thing if you take a look at this DOM here. 670 comes in, trades at the ask. They react against it. You're seeing a big clustering of positive delta that's starting to react on the sell against that area. You're starting to see a capitulative moment where the buyers are no longer as strong, right? They've been trying, and these reactive sellers are starting to push prices aside. So these are two main concepts that you can take to your futures trading with order flow. You look at delta, DOM, and footprint, and you can get a very round, encompassing picture of where exhaustion and absorption can appear. So if you guys have any comments, questions, you let me know. Hit that subscribe button, hit that like button, and I'll see you guys in other videos as we do more wrap-ups and more educational concepts like these. We'll be talking about other things in the psychology realm, in the technical realm, in the order flow realm, everything. Just let me know down below and we'll make videos on that. So thank you guys, and we'll see you next time.